Hi and welcome to the Equity Master Investor Hour, our not so regular podcast. But today we are very excited to be hosting this after I think a couple of months now, and we are very excited to have Ajit Dayal with us. Ajit, as you know, is the founder of the Quantum Group, Quantum Advisors, Quantum Mutual Fund, and Equity Master and Personal FN, and a person who lives in multiple parts of the world, tracks the global markets, and has many firsts to his name. And from time to time, we go back to him, especially in moments like these, which are very uncertain, if you will, and try and get his perspective. So, the background to this podcast is that in a conversation with Ajit sometime in November, I think, uh, Ajit actually teased an idea. He said that he actually has a view on India that if certain things were to happen, that there could be a big trend coming. He didn't tell me plus, minus, or anything. He said, but something big could be around the corner, and and if and he could make some time in a month or so if we wanted to talk to him. So here we are talking to Ajit. Ajit, welcome to the Investor Hour once again.
Hi Rahul, good to see you.
Yep, you've got us all at the edge, on the edge, after that call in November. Uh, so we have quite a lot of ground to cover, including the point you want to talk about. Uh, but I want to start with something a little more bigger picture to begin with, right? How are you seeing the world as it stands today? What's on Ajit Dayal's radar when he looks at the world?
Right now, to see the world better, I have to have my cataract surgery and my glaucoma surgery, that's for sure. So, it's been a very, very strange year for everyone, obviously.
Mhm.
And, you know, I've been on multiple chat groups and, hearing as everyone has in a post-COVID world. Um, but yeah, so actually, I began the year, I was in Europe marketing for a new fund that Quantum was launching for international investors focused on what is called the ESG space, the environment, social, and what they call G for governance space. Uh, and it was more like a private equity fund, so a very large fund. And I was meeting large institutions here and kind of preparing for that, actually, just about getting this things organized when COVID hit. I was in London actually, and I then decided to fly from London, which is on March 6th, was the official date that UK accepted that the pandemic had arrived. People were already dying, but no one really, officially put a rubber stamp and said, "Here's the visa for the COVID-19, the illegal refugee that has come in." And I left London on March 6th, and I came to Switzerland. And then from Switzerland, I came across to India one day later. And then I self isolated myself from March 9th when I arrived in India till March 22nd, 23rd. And of course, just as I emerged from my self isolation, we
Yeah,
went
locked up.
into, it was the 1 day Band and the Maharashtra thing, and then the national lockdown,
Mhm.
uh, you know, from March 23rd night or whatever. So, uh, and then it was in a strange situation that my children were studying in Europe.
Mhm.
So they were in school and college at that time. And then, when Europe shut down, they were kind of alone. So I took a flight from India in April to head to Switzerland. And then I was in Switzerland with them till their university opened. And then I could not go back to India because India had shut down airports. So I went onwards to London. I didn't want to be with them because they're going to school and university and meeting people. And I have a comorbidity of asthma.
Mhm.
So I went then from there on to London, and London was like dead. There was like no one there. So, the virus jumps from human to human, and there were no humans around anywhere in the place that I was staying, like very, very few. So I was safe in that sense. And I was in London till November. Went through a bunch of lockdowns in
Mhm.
London, and then before the last mess, managed to leave London, and now in Switzerland, and now of course trying to figure out how to get back to India. So it's kind of, it's been a strange way, and in a strange world, and in a way, I've been able to see the world from different perspectives, from
Mhm.
being locked down in India. I think I did a calculation. I've given up on doing it now, but I think I've spent 2 months in lockdown and quarantine in some continent or the other over the last 7 months. So it's been quite a strange thing, but the advantage is that you get to, although you don't necessarily meet people, you get to hear what the locals are saying about the pandemic, the society, the business, their lives, and to some extent getting a insight into what's happening bottom up in the economy, right? So you have the governments making statements, you have the central banks printing money, you've had elections in the US, you have elections in Bihar, you have all of that going on. And I think that, when I spoke to you in November and I mentioned this, that was pre-vaccine actually.
I think so. Yes.
And the vaccine came
Mhm.
kind of after that. But everyone knew the vaccine's kind of on its way.
Yeah. Yeah.
No one
Mhm.
really knows what the outcome of the vaccine is going to be, but
Mhm.
we knew it was being launched. And it was interesting to talk to investors in this part of the world because in the developed world, you're seeing interest rates pretty much sub-zero
Mhm.
across the spectrum, except in the US where it's still above zero, but much of the developed world is sub-zero. And when you talk to the pensions and you talk to the long-term investors, they have to make decisions on where they're going to allocate capital.
Mhm.
And they are looking for rates of return depending on which country and which part of
Mhm.
the world in the developed world, anywhere from 4% per annum to 7% per annum is
Mhm.
what they're looking for in their local currency. And there you have India with government interest rates at, was as high as 6% and now coming down to 5.5%. And, so if you're a foreign investor and you see this government of India bond, which bears government of India risk,
Mhm.
and you decide to put, some of your money there at 5% or 5.5 or 6%, and from 1966, that's when India kind of went off the silver standard or devalued our currency against the US dollar. So from 1966 till now, the Indian rupee has lost about 2.7% per annum compounded.
Mhm.
So if you're a 15, 20, 10-year investor and the government of India bonds offering you 5.5, 6%, 5%, and you knock off 2.5% from there, you're still getting 2.5 or 3%, you
Mhm.
know, in your local currency terms, which is far better than negative interest rates, in Germany and France and everywhere else in Western Europe and zero in America. So what I was talking to then was really something that I was kind of sensing that if the world is looking for yield, right, and the pension investors are looking for yield, so not growth. Growth is when you fund new companies, existing businesses, listed businesses, so a range of businesses that are earning money, as opposed to getting a dividend yield and some surety of cash flow. So, the government is not going to go bankrupt in a long time, I hope. Hopefully, it will never go bankrupt. But so if they're offering you this yield and you're getting a 2.5, 3% net after currency, then it's probably a good play.
Yeah.
And so the view was that the government in general, or the economy in general, could get anywhere up to $100 billion inflows from foreigners every year.
Mhm. Mhm.
$100 billion goes a long way in an economy. So this is where I said, and I'm happy to jump into that right now. If you want to ask other questions, we can go there and maybe taking away a lot of the Q&A you had before that. But I was kind of linking my travels with my perceptions and then trying to see why I was saying what I was saying from
Yep.
reading the local newspapers, talking to local people, talking to fund managers, talking to investors, and seeing what's happening in India, of course, and being in touch with the colleagues in India. So
That's that's the calculation you did with me.
that's the calculation with you, yeah.
Yeah.
So, I just said that's it. So, I mean, could be $100 billion delta extra flows that come into India. And now let's look at the banking system. So, this is now what does the government do with that money when it comes in?
Mhm.
So, if the RBI or the government have a mechanism in place
Mhm.
where they take that 100 billion and they allow it to seep through in the economy,
Mhm.
so then there's a multiplier effect. Like, so just imagine if State Bank of India or HDFC Bank or anyone raised $100 billion QIP, right? An international following, or kind of they do a placement
Mhm.
with international investors. They would be able to take that 100 billion, and keeping aside your SLR and CRR and all that stuff, they could multiply that by 5x.
Yeah.
So the 100 billion could actually give you 500 billion of lending power
Mhm.
in the
Mhm.
economy,
Mhm.
right? Coupled with that, for example, the state of Maharashtra, and I think I wrote about this a year and a half ago actually, that one way to kickstart the economy is to bring real estate prices down. And the way to bring real estate prices down is twofold. One is to force the developers to sell their existing stock of real estate. And how do you force developers to do that? Well, you tell every developer, we're not going to give you access to any more loans. That's it. If any of your loans come up for renewal,
Mhm.
private sector or government banks or anyone,
Mhm.
no more rollover. You have enough stock, you go and sell your stock in the market, you release cash flow. And at the other end, you've got the government reducing stamp duty, which is
Mhm.
what the Maharashtra government has done
Yep.
till December 1st. So, if governments across the different states where this unsold inventory or this unsold stock of apartments and all is lying, you could actually have a kickstart of the economy. And we've seen that. You've seen the number of registrations for apartments in Bombay. Sales have
Yep.
zoomed compared to last year, also, of course, much higher than much of this year because of COVID, but even compared to last year. So you could have an economy kickstart
Mhm.
where 500 billion available for home loans, available for lending to the retail market. You have property prices being forced down. You have stamp duty being cut. People start buying property. And when you buy a flat, with your flat, you normally get a car parking space. You get a two-wheeler parking space. You have an empty flat. You have to start equipping it. You may come from an old flat and you may transfer something over, but you'll always like to buy something new, whether it's curtains or bed sheets or mats or whatever it is.
Mhm.
These are things I've been buying. I know, because when I moved in to an apartment to stay for a few weeks, a few months in London, I had to start buying all this stuff. And all of this leads to some acceleration in the economy.
Mhm.
And capacity utilization for the economy has been in the 70% or so range. And at that capacity utilization for the economy as a whole, companies are unlikely to invest in new businesses or in new factories, in new plants. But once you have this kickstarting and everything starts going up, the demand, your capacity utilization increases. And when that happens, so you've got this initial consumption led boom, followed up because of high capacity utilization and factories getting full. You have then this followed up by a larger kickstart of the a capex cycle of corporate India, right? So that then leads to employment and everything else. So there could be a virtuous cycle
Mhm.
if all this was to play out. Now, there are a lot of ifs and buts along the way,
Mhm.
obviously,
Mhm.
but
Mhm.
and then the the I think the environment is right for the government to start thinking about this. And you've seen patches of it here and there. They should read the honest truth more often, probably. But there are patches of this, which you've seen the stamp duty cut in Maharashtra. You've seen what it's done to the housing demand.
Yep.
Why not do the other extent and tell all real estate developers,
No
you know
more
what,
loans.
no more loan extensions, bring your prices down, release cash flow to pay off your loans, don't come back and refinance
Mhm.
any loans. And I think that could lead to, a significant boom in the
Yeah.
economy.
Yeah.
Will the government do anything about it? I don't know.
Mhm.
But, that's what kind of excited me when I just saw this hunger for yield
Yeah.
in the global markets come September,
Yeah.
October.
Yeah. So I'm just checking the date on this. It's 1st November is
Yeah,
when we spoke. So there's pre-election results in the US and pre
yeah.
this. So since then, we know one thing for sure: money has rushed into India.
Hmm.
It's rushed into stocks, and you'll have the stats on this, I'm sure. But when we are reading about these NCLT cases being solved these days, you have all these foreign funds, bidding because they are probably
Yeah,
getting money at 0.5% and doing
correct.
all the and so
Yeah.
so I know there are a lot of ifs and buts that you say about the
Hmm.
kickstart.
Hmm.
Uh, what what are the chances that India will finally come out of this? What? It's been a 6 years, 7 year, like a slowdown,
Yeah, slump.
a slump.
Yeah. So, this is one chance to come out of it.
Hmm.
And this is a chance to come out of it big time in some sense. And if you kind of catch the bull by the horns, as the expression goes, you could be jumping at economic GDP of 8, 9, 10%
Hmm.
for a couple of years
Hmm.
if you got this right. A 500, so $100 billion annual kicker
Hmm.
in terms of delta foreign flows into government bonds
Hmm. Hmm.
pass through to the banks, pass through to the loan cycle system, leads to a $500 billion, sort of, ammunition of credit growth.
Oh,
That's 500 billion on an economy that's roughly 3
3
trillion.
trillion. Yeah.
So that's roughly a 15% kicker, right,
Hmm.
from
Hmm.
this.
Hmm.
So, that's the kind of number you can see for a couple of years, and then it becomes a self-sustaining cycle. Because,
Hmm.
like I said, the consumption boom
Yep.
leads
Leading
to
to
a
the
capital
capital.
investment boom, which
Hmm.
leads to investment cycle growth, which leads to employment, which leads
Hmm.
to higher salary, which leads to more consumption. So
Yeah.
you could have a kicker in that sense for multiple years.
Hmm.
So it's an extremely exciting thought of, so the NCLT, which you spoke about, or even the portfolio flows, those don't necessarily create, well, the portfolio flows into stocks. So in the month of November, foreigners pumped in $8 billion FIIs, FPIs
Hmm.
into the Indian stock market, a record,
Yeah.
right? And it's kind of become plus for the whole year, if effectively because of that 8 billion. But the retail mutual funds have sold 4 billion. They've been minus 4 billion and foreigners are plus 8 billion. So you're
Hmm.
net plus 4. But that doesn't create employment. That's just stock market prices
Yeah. Yeah.
that are there. On the NCLT side, yeah, there may be some eventual employment,
Hmm.
but marginal, I would say. The NCLT does something better, which is it allows the banks to be more stable so
Hmm.
that they can start lending in future,
Lending. Hmm.
right?
Hmm.
So
Yep.
yes, so that's also something positive for
Yeah.
future. But this 100 billion can come in like in one day,
Yeah. That's a
right?
faster
So
impact.
if you look at the global pensions and the
Hmm.
global sovereign funds,
Hmm.
they have roughly about 100 trillion
Trillion dollars.
dollars
Hmm.
of assets.
Hmm.
100 trillion.
Hmm.
Okay, that's
Yep.
about 40 times India's GDP or whatever it is. It's a big number.
Hmm.
100 trillion of assets. If they decide to sweep, right, 1% of their money towards Government of India bonds or Government of India paper,
Hmm.
that's $1 trillion, right?
Hmm.
0.1% is 100 billion. So I'm
Hmm.
not even being ambitious. I'm saying don't give me 1% of your money.
Hmm.
India's share of global GDP
Hmm.
is roughly about 1.52% of the world economy. Again, now it depends how you measure it, purchasing power parity, nominal terms, whatever it is. India's stock market share of global stock markets is about 1%. So it's not hard to assume that someone should put some of, again, of that 100 trillion, they probably have 30 or 40 trillion in fixed income assets, these various pension and sovereign funds. So out of that 30, 40 trillion dollars, right, a 1% number becomes 30 to 40, 300, 400 billion dollars
Yeah.
spread over 3 years. So
Hmm.
if that money came 100 billion over 3 years, it's not inconceivable. In fact, we wrote a paper on this and we gave it to the regulators and shared it with
Hmm.
people, about 3 years ago,
Hmm.
showing that how India could actually get that kind of capital. But at that time, the world was still growing. It was all pre-COVID, and interest rates were not sort of negative in
Hmm.
many parts of the world. They were just low. But this is a catalyst. So India can actually take advantage of the global macro
Yeah.
banking system where rates are low and we have high rates and get the money in and start getting the economy going.
So a two-part question. The first part being, who are we competing with globally for this money now?
No one.
Historically,
There is no one
historically
of
it was
any
China.
scale or size. No one.
Historically it was China, but now that's getting
No.
diluted.
So, so historically it was China, and China will get capital. I don't think China is going to not get capital in the future, despite whatever it may have done about the China virus, as President Trump called it. They'll still get some kind of capital flows. I don't think that's an issue, but India's not competing with anyone. There's enough in the world for everyone. When you have $100 trillion of
Hmm.
capital sloshing around
Yeah.
with the pensions and the various sovereign funds, you can easily get 0.1%. It's not a lot of
Yeah.
money. So we're not competing with anyone.
The other part of this question is that then the money coming to India, it seems
Mhm.
almost like it's for us to lose because the opportunity is there. So, what could go wrong? I remember you telling us, I'm talking decades back now, uh, that foreigners are usually afraid of, especially pensions, they're afraid of headline risk.
Mhm.
You used to explain us that they don't ever want to be invested in a country which is on the front page of the Wall Street Journal saying there's something
Yeah.
dramatically gone wrong. So, what do you think are the challenges, or what could go wrong here that that money could get, the money could get turned away?
So, clearly, as you mentioned, the headline risk is there, but there's another risk of just the absorptive capacity of the government not being good enough for them. That the money comes to Government of India bonds and it just sits there and nothing's happening, and we have to continuously pay them 5.5% interest every year,
Mm,
right? And you have to basically generate that 5.5% flow in the economy to pay
mhm,
them. But if the money is just lying in a bank account and doing nothing with the Government of India, then what's going to happen? Nothing's going to happen. Then eventually your current accounts will go into negative because you'll be collecting all this money and paying interest and repaying capital. So
mhm,
then you have you're not really doing anything with it. It's not being productively used. So just by sitting on it, you would
mhm,
lose confidence, because at some point in time you got to pay the money back, and your balance sheet as a government and P&L
mhm,
won't allow it, won't be able to service the debt. That's one problem. The second part is that the money comes in and then
mhm,
it's used for something stupid like the coastal road in Bombay,
mhm,
or it's used to build a bullet train between Bombay and Gujarat or something like that,
mhm,
which is probably one of the, all these projects are probably white elephants that will cost a lot of money and end up in huge losses.
mhm,
So you could waste capital at the government end.
mhm,
And then, of course, the third is that even if the government does open up everything and the money does go to State Bank of India and State Bank of India starts lending it out and property prices come down and you get that whole cycle,
got it.
but then you end up in a boom bust scenario where you fuel prices, asset inflation, etc., and then you end up in tears a few years later. So it needs to be managed. Obviously there have to be checks and balances everywhere. You can't have money just sitting and doing nothing, and you can't have money which is kind of multiplying very quickly. You have to kind of find a balance between the two.
Yeah. So if one was to attribute this, all these PLI schemes that the government is introducing to try and get manufacturing capacity set up, so that could be
Yeah.
one way of absorbing some portion of this capital, right?
Not
It
really,
may not
because
be enough.
those manufacturing companies have their own capital. They don't need
They
this
don't need it.
capital. They have their own money. So they don't really need this, right? So I think this is literally for consumption, not for capital investment. I think
Uh-huh.
that's the key distinction, that this can be for the individual consumption,
Uh-huh.
which can, you have to basically clear the stock of unsold property or unsold goods across the economy,
What's clogging the
right?
system? Clean the
That's right.
pipes. Yeah. Okay.
Correct. So there's a whole bunch of inventory stuck in the system, right?
Mm-hmm. Mm-hmm.
Because of COVID and even pre-COVID, there was just a general slowdown in demand. You
Mm-hmm.
need to accelerate demand. This is one way to accelerate demand. The other way to accelerate demand, of course, is what they're doing in the US, which is sign checks of everyone and say, here,
Give them the money.
$600 a month or
Yeah.
$2,000 a month, take it.
Yeah.
That's the other way to kind of accelerate demand. But
Mm-hmm.
this is the other way to get demand coming in from foreign flows.
Mm-hmm. Do you
You know,
think we can pull this off? Can India pull this
I
off?
don't know, I believe the finance minister has been hinting at an exciting budget in February. Well, let's hope that we're working on this.
Yeah, she's raised expectations. She
She's
said like,
raised expectations. So,
yeah, yeah.
the thing is, it would be, I think, relatively easy to get it done. It literally requires three statements. The first statement is to foreign investors saying, hey, we're looking to raise 100 billion,
Mm-hmm.
and that 100 billion is going to go to State Bank of India for housing loans.
Mm-hmm.
The second statement is to the real estate developing community saying, as per decree, you cannot borrow any money, you cannot roll over any financing until you've sold your, existing
Inventory.
unsold stock,
Hmm.
right? That's the second thing. And the third is to the state government saying, bring your stamp duty down, give a waiver for six
Hmm.
months and you'll get what you have to get. So it's pretty easy in my view.
Uh, I'm going to ask this because in India it's always big news.
Hmm.
When you see, when you see Samsung announce that okay, they built the world's largest mobile phone factory in India, or when you hear of Apple saying, okay, we are moving to India
Hmm.
partially, how do you read this? What triggers in your mind what's happening to India? Because you've seen it for decades now. How many false starts India has had when it comes to being part of the supply chain, which can really bring jobs and money to the country.
So I don't think India, I think we've got a long way to be a supply chain, a significant supply chain player,
Hmm.
right from power to infrastructure to labor. I think it's a long way. And I think that, India's messy right now. India's messy. So I've given you the flower of India. I've given you the rose that can blossom
Hmm.
in India, right?
Hmm.
But I'll tell you the other side of India, the dirt side. And I think the dirt side is that India has going through multiple wars, multiple levels of friction, multiple levels of misunderstanding. And, Rohini Nilekani wrote a book, I think a decade ago, uh, where she basically, I think it was based on a NDTV series, which she had done, where she was basically having people come in and call, I think it was called The Common Purpose, if I remember the name of the book. But and I encouraged people to read it. And basically, she had on. I did watch the TV show, but I did read the book, where she had people in the room. One was so she had Mukesh Ambani who wants something, and then the other person who says, "Well, I can't give you that because his land belongs to farmers or whatever." So
Hmm.
there was that. There was it was not common purpose. Sorry, I forget the name of the book. If you Google it while I'm talking, that'd be
Yeah.
great. So I can't see very well. So anyway,
Hmm.
so she basically had this thing about, having two opposing sides of the same story, if you will,
Hmm.
in front of her. And in the book, she writes about it, and obviously on the TV channel, on the TV series, it's there. And I think we've not improved since then. We've gotten a lot worse since then. There are too many conflicts. So neither did has the existing BJP government, nor has the previous, sort of UPA governments. They've not addressed these conflicts that are inherent in India. They've not found a way to get a partnership done between the source of land, the source of labor, and the owners of capital. And we still have that conflict, and if at all, it's become wider. And I think that's a very sad state. And we're seeing it in the farmers, strike going on right now. So you've got a government that, rightfully so, wants to reform the farm sector. It requires reform. You've got farmers who've been weaned on a system which is not really working either for them or for the environment or for nature or for us as such as a country. And yet what they've announced sounds like without any discussion with the other side. So the other side reads later that, we can't do this and we can't do this, and we, have no access to courts of law if the contracts don't work out, et cetera, et cetera. And there's misunderstanding on basic things like, minimum support price. I mean, the government says, no, no, it's there, and the farmers are saying it's not there. And, how could it be that such a basic thing, like whether MSP is there or MSP is not there, how could that be an agitation point?
Yeah.
So either the government is, and I've not read the three bills, so I'm not going to make any comment on it, but either the government has got a very badly drafted set of bills or acts, or the farmers haven't understood what's in those bills, and they can't. There's no communication, and I think that's a big problem.
Hmm.
And so I've given you the rosy picture of what could happen, and this phenomenal nirvana of 8 to 10% GDP growth rate for the foreseeable future, to get us out of the slump. But the other end, you've got the problem of the government and not talking to the different owners of land, capital, and labor, and trying to get it together and trying to say what is this harmonious decision
Mhm.
for the future. So, and I think a lot of this, on a very fundamental basis, has to do with a failure of democracy,
Mhm.
a failure of practicing democracy. So, not talking about the theoretical aspect of freedom of speech, which
Mhm.
itself many people are questioning, but also about making democracy work for economics, for the economic benefit of a
Mhm.
country. And I
Mhm.
think a lot of it just shows that decision making
Yeah.
or decision makers are so far removed
Yeah.
from those who they govern that there's a massive disconnect between policy making and objectives of the subjects, if I can call them that,
Mhm.
who have voted for those in power. And that's even true in many parts of the world, particularly the
Yeah.
US. What you
Yeah.
saw in the US playing out the last 4, 7 years has really been this disconnect that started during the Reagan administration or Thatcherism in the UK till now. But that's another discussion.
Yeah. But I think you make a very interesting point. I've heard you make this before as well. Incidentally, I think even Raghuram Rajan, whenever he talks, his main criticism is that there's no discussion happening.
Yeah.
And it's not possible for, one, two, three, four, five, 10 people to sit and come up with all these policies. There has to be
Mm.
discussion, there has to be debate,
Yeah.
there has to be broader involvement.
Mhm.
By the way, the name of the book is Uncommon Ground.
Uncommon ground.
Uncommon
Sorry,
Ground,
not the yeah, uncommon ground. Yeah,
dialogues between business and social leaders.
yeah. And which year was it written? Can you check that? It was on the site. It shows
Yeah,
up somewhere.
yeah, it'll show.
That book. It was based on an NDTV series. I remember that, and I really, really enjoyed the book. I enjoyed the concept of the book and the discussions that were there. One may have different viewpoints on the conclusion or the points. That's
Hmm.
not. But the point that she was trying to get people
Yeah,
with uncommon ground to
yeah,
a common ground,
yeah.
right? And
2011.
and I think in the book, uncommon is written in different text, right? What
Yeah,
UN is under, and common is. She's trying
yeah,
to find common ground where there's uncommon ground.
yeah. Common is all joint, I guess. Yeah.
That's right.
Yeah,
Yeah. So
2011 is when the book came.
2011.
Yeah,
Yeah.
yeah. Okay. So moving forward, I think uh, we've got a good macro picture. We've spoken about several things, but talking about asset classes now, I think we
Hmm.
can never talk to you and not talk about asset classes. Uh, how? So let's go one by one, right? Let's go with let's start with stocks.
Hmm.
Uh, did you by any chance buy Tesla at the start of
No, I
2020?
didn't buy any stock. I wish I
Yeah,
had.
yeah, you had.
Wish I'd gambled it.
So how do stocks look to you now? Wearing your value investing hat, or just wearing a hat of a traveler and
So
person.
yeah, so
Right.
I'd like to talk about two aspects: investing and value investing. I think they're
Yeah.
very different, right?
Hmm.
So as an investor,
Hmm.
it's now without any doubt, the common ground is
Hmm.
that you need to be in multiple asset classes.
Okay.
Time and time again, whenever you go back in history
Hmm.
and you try to see which asset class did better every year, and you try to time it, it never works. You
Hmm.
have to be in those three. I'm going to keep real estate out because real estate is very personal use and all
Hmm.
that stuff. But to take the sort of three liquid asset classes of gold, fixed income, and stocks, obviously, and it's very clear that you need to be in all three. There's no doubt about that now. The question is, what should that mix be? Um, and are stocks expensive? Yes and no. If you are living in a world where interest rates are negative
Hmm.
and the cost of capital effectively is non-existent, then you're living in la la land, and any kind of punt that you make on a company which can earn some profit is
Hmm.
better than zero or negative which a bank can give you.
Hmm.
So the only thing you have to see when you look at invest in a company is, if I put in 100, am I going to get zero point 0.5 out of that 100? Because the bank is giving me minus 0.75 in Europe
Hmm.
and 0.25 in the US. So if I get zero point 0.5 on 100, that's fantastic. The question is, what is that business? The business could be anything, right? Because when your cost of capital is so low, anything, a speculative, anything, everything becomes a speculative play in some sense, right?
Mm-hmm.
So
Mm-hmm.
speculation is taking risk. Risk
Mm-hmm.
assumes that there's a cost of being punished for the risk, right? Which means that if I had given you 100, but if my bank was giving me 5% interest, my punishment cost is that five that I would have lost if you don't give me back any return. Forget the principal part, but just on an annual basis, right? The
Mm-hmm.
bank will give my 100 back. And of course, I hope you give my 100 back, but give me some return. But when the German bonds are trading at minus 0.75%, and the Swiss bonds are minus 0.75%, i.e., I give you 100, and after 7 years, you give me 99.25. I'm saying, like, are you crazy? I'd rather give some guy who's got a great idea and, speculate with him and
Yep.
see whether I can get something returned from, and of course, that 100 will multiply over time. So the Teslas and whatever else of the world. And, so you've had this completely insane environment. So every fundamental investor, and now we come to value investors like us, every value investor is in a quandary because there is no comparative benchmark of punishment, of cost of capital. So what do you do? How do you value something, right? When there is no benchmark against the cost of capital for it. I remember I gave a talk with with Sam Zell, who's a legendary real estate investor. He sold his company Equitable to Goldman Sachs just before the 2008 crisis and Lehman bankruptcy. And I remember that before we went on stage, we were sitting next to each other, and he asked me, what do you do? And I told him I manage money, and then I explained that we're value managers. He, in his very wise way, and if you can interview Sam Zell once, you should. He's really a phenomenal guy. I'll try and see if I can help you with that.
Mm-hmm.
But he tried. He said, "Look, young man, you don't manage money; you manage capital." And I
Mm-hmm.
kind of said, like, what does it manage money, manage capital? He says, money has no cost to it. Capital has a cost to it.
Mm-hmm.
So we're living in a world with a lot of money.
Mm-hmm.
We're not living in a world with capital.
Capital.
Value managers can do very well in a world where there's capital because
Mm-hmm.
capital has a cost to it. Value managers cannot do well in a world where there's money and everyone's speculating. That's the distinction. And it's a big distinction. So
Mm-hmm.
I gave an interview, I think, with Economic Times at the start, in between the pandemic, June, July, or something, where I told them, I said, when this recovery happens, so on the way down, a value manager tends to do better. At the start of a recovery of
Yeah.
an economic cycle and stock market cycle, value managers also do much better. So we've seen our value fund in India, the Quantum Long-Term Equity Value Fund, has followed that cycle. But I said on a 3-year basis, if interest rates continue to remain zero or negative, value will have a tough time
Mm-hmm.
because eventually, when that growth kicks in again, and if the growth is based on 0% interest rates or negative interest rates, and is based on money flows, not capital flows,
Mm-hmm.
then value will have a difficult time chasing the Teslas of the world in terms of return,
Mm-hmm.
if you will.
Mm-hmm.
So it's going to be difficult. But in general, going back to your question, asset allocation across three primary sectors:
Mm-hmm.
your debt or fixed income, and stocks, and gold.
Yeah.
Proportions, vary. I've used a very simple formula that I'm happy to talk about later, and I think everyone should follow it. I followed it, and I love it. But I think those are the three
Yeah.
broad things. But within stocks, there
Mm-hmm.
is that dichotomy of growth and mid cap and small cap and value.
Yep.
So we saw what happened in November. So mid cap and small cap stocks were, I think, negative rates of return year to date
Mm-hmm.
till October.
Till October.
In
Yes.
November, they had a blowout month, and in November they turned positive. Including Berkshire Hathaway, actually. Berkshire
Mm-hmm.
was kind of, think the stock gained 12 or 13% in 1 month in November,
Yeah.
and that made it plus for the year
Mm-hmm.
because the vaccine came out. So that was a month of the vaccine. So everyone
Mm-hmm.
got, everyone's excited now that we're all
Mm-hmm.
going to be fine.
It'll vaccinate them against losses.
Yeah, exactly. Absolutely. Yeah.
So, so, uh, so if you had money now, would you buy stocks? Would you buy into a equity fund at this stage? Would
So
you?
I have my allocation model based on something else. It's on my consumption pattern of what I
Mm-hmm.
use every month,
Mm-hmm.
and then the balance I invest in a particular ratio. So what I've revealed is that I keep between 24 to 36 months of money that I need every month
Mm-hmm.
into, in my case, the liquid fund of quantum
Mm-hmm.
and the multi-asset fund of quantum,
Mm-hmm.
but basically in fixed income kind of
Yep.
products
Mm-hmm.
effectively. And I keep about 2, 3 months money in bank accounts.
Mm-hmm.
So I don't keep, so I keep some money in bank accounts for 2, 3 months of money. And then I keep the other 21 months of expenditure money in liquid fund and the multi-asset fund. And then the rest of it, I do 80% in equity and 20% in gold.
Go.
So that's roughly what I do. I don't check this every day or every month
Yeah.
or even every quarter, but that's roughly what I end up doing. And within equity, I've taken a thing. So obviously, I'm a value bias. So within that 80 of equity, I had used to have a higher number in value, but I brought that value number down. So if in the past, if I had 80% of 80 in value,
Mm-hmm.
I've kind of brought that down to maybe 60%, 50% in value.
Okay.
So I brought my value exposure down
Mm-hmm.
and I've increased. We launched a new fund in quantum in India called the Quantum India ESG Fund, which is a very interesting product and people should look at it and read all the disclaimers with it. But I put some money in that when
Mm-hmm.
it launched last year. That fund's done very, very well.
Yeah.
Again, it's a very short-term track record of only 18 months, so all the
Yeah.
buyer beware and everything with it. And then, of course, I put some money in the quantum equity fund of funds, which invests in a whole bunch of other funds, small cap, mid cap, growth, everything else. So I've kind of diversified
Makes
my
sense.
portfolio,
Mm-hmm.
to value, small cap, growth, mid cap, and also ESG by
Mm-hmm.
doing that distribution, all by buying three funds. So by
Mm-hmm.
buying three mutual funds, all from the quantum stable, I managed to get my equity exposure. But for an investor who's buying individual stocks, I would use that pyramid, which we've had for many, many years,
Mm-hmm.
where you say at the base of the pyramid, you have your large, steady stocks,
Yep.
and in the middle of the pyramid you have kind of your mid capish,
Mm-hmm.
and maybe some small cap stocks, and at the tip of the pyramid you can have the extremely illiquid
The
small
high
cap
risk.
stocks.
Mm-hmm.
So I think if you do that, and as a pyramid shows that the volume of the pyramid is largest at the base, so you
Mm-hmm.
put a chunk of your money in the stable stock portfolio, then
Yep.
at the middle of the pyramid you have the next bunch of volume where you have your mid cap, small cap, and at the top of the pyramid, what we used to call play money way back
Yeah.
when, you have 5-10% of your equity portfolio lying in play money. So
Mm-hmm.
if I had to give a rough number, I would say 50 to 60% at the base of the pyramid, maybe 20-30%, at the middle of the pyramid, and then 5-10% at the top of the pyramid where you have your play money, if
Yeah.
you will, where you're taking speculation, including things like Tesla.
Yeah.
In the
Yeah.
early days, of course, now Tesla is a big company
Yeah.
and it's liquid, but stocks of that nature.
Yeah. Uh, do you have an index number in mind for 5 years, 10 years? Are you working on anything? Yeah. Working with anything rather?
So I think the answer is it depends. It depends
Mm-hmm.
on whether Mrs. Sitaraman, on the finance minister, gives an exciting budget or not. I'm I'm not very positive on the outlook for India until we see this kind of a significant drive, which becomes a game changer. If we don't have a game changing approach to the economy and to solving the social disconnect that's going on, for example, between the farmers and the government, or landowners and factory owners, or resource owners and the miners, etc. If we don't see game changing reform, then I don't think India is going to break out of a 5% rate of growth of GDP. And I think we'll have higher inflation than what we have now. So I would expect the stock market to gain 10, 12% per annum in a situation where we don't have a game changer.
Mm-hmm.
But if we have a game changing, budget or a game changing
Mm-hmm.
attitude, then I think the stock market can do very, very well from here, extremely well from here.
Okay.
So I really don't have a clarity, but I have
Yeah.
this really wide thing. So which is why I'm not really doing anything aggressive on my portfolio. I'm just leaving it as
Yeah.
it is for now.
But even the base case is quite interesting because 10-12% is not a bad return. Yeah.
Yeah, it's not a bad return, but it'll be with higher inflation.
Hmm.
So you could have lower GDP with a high inflation.
Hmm.
So far we've had, say, 7-8% rate of growth in GDP and about 5-6% inflation. Official numbers, forget how we experience life, 5-6 numbers. You can have a flip of that. You could have 5% GDP and 8% inflation, 7% inflation.
That won't be good.
You could
Yeah.
have it a flip on the other side, which is not good for life. It's okay for stocks, but your purchasing power, a
Goes down.
10% rate of
Yeah.
return with 8% inflation is not as good as
Hmm.
a 15% rate of return with 5% inflation, which is what
Okay.
we've seen, in the last few years.
Okay.
Um, so from that perspective, it may not be good.
Yeah. Coming to debt, I think in debt you've spoken innumerable times. Your main point with debt is avoid credit risk unless you can understand it. That's what you talk about always. Is there any other kind of debt that you look at, or is just a liquid fund which is made of government or quasi-government securities, and that's it?
That's what I do with my money. I don't have any of my own money in. There is a quantum fund which has done extremely well, called the Quantum Dynamic Bond
Bond
Fund,
fund, yeah.
managed managed internally by Quantum. I think for the last 5-6 years now. It's been around for a few years, but
Hmm.
I've personally not put any money in that, only because I don't understand debt markets and I don't want to track debt markets. So I told you about the three broad asset classes of having debt and
Hmm.
gold and
Hmm.
equity.
Hmm.
And that debt, I have decided, unlike the pyramid of stocks,
Hmm.
in that debt, I could also do the same thing. I could take liquid fund as a base, and I could add a credit fund on top and take a wild credit fund on
Okay.
top also. But I haven't done that. I don't follow that interest rate cycles too much. I don't understand credit risk. I'm not a fixed income person. So what I don't understand, I don't like to do too much of. Just take the simple solution out there, which is liquid fund. You would have been far better off if you, as I would have been, if I had bought the dynamic bond fund.
Hmm.
Pankaj has done a fantastic job of having a great rate of return. I think
Hmm.
it's 13, 14, 15%, I forget, compared to a liquid fund of 5-6% in the past. So clearly, I would have made a lot more money if I had put some of that pyramid within the debt asset allocation
Yeah.
towards the middle of the pyramid or even the top end of the pyramid.
Hmm.
But I didn't. I was not comfortable enough to do that.
Okay. And gold. Gold, again, you're very clear you should own it in physical form. Any more thinking on that? In what form you should own gold, and also
No,
talk to
so
us and also talk to us about what you think about the price of gold going forward. There's a lot of
yeah.
excitement around that.
So I continue to maintain that you should have gold. The way you have currency, you have some in your wallet, you have some in your cupboard, and you have some in the bank,
Bank locker.
right? When you have currency and some in your liquid fund or whatever. So in a very similar way, I think gold is the same. You wear some, you may have a gold chain or gold earrings and all that stuff. So you have gold with you. You have some gold in your cupboard maybe,
Hmm.
and then you have gold in the bank locker, either in your bank locker or in the ETF's locker.
Okay.
So I'd rather it should be in the ETF locker where it's liquid
Hmm.
and it's also standardized. You know what gold, quantum gold fund in this case, or quantum gold ETF is buying. So the quantum gold savings fund has 0.99 finest or whatever standardized gold bars lying there. Yes, you have to pay the banking, you have to pay the locker fees to some extent for the fund, etc. But that's kind of probably the same ratio as you would have your
Hmm.
own lockers. But it's a very liquid and very effective way of doing it. So I still believe that gold you should have it in multiple forms.
Hmm.
And the reason you own gold is in case governments fail. That's why you have gold. That's when people say buy the government gold sovereign bond, which is earning an interest of 3 or 4 or 5% with certain limitations to it. I say, why? I mean, the reason I'm buying gold is because I'm assuming that there's a breakdown in the system. So why would I buy something from the government
And
who
get
may
it.
not be able to handle the breakdown?
Hmm.
So I'm
Hmm.
not saying that there will be a breakdown, but it's an insurance,
Yeah.
right? So I
Hmm.
don't want to buy my insurance from the same person whom I'm insuring against.
Against.
in some sense. I want to buy it from someone else. So
Mm-hmm.
that someone else is physical gold or in
Mm-hmm.
ETF gold.
Mm-hmm.
So I'm not a big believer in the gold sovereign bond scheme because it defeats that underlying fundamental purpose of diversifying your
Mm-hmm.
risk and your insurance policy. And the other aspect I think of gold is one of pricing. So,
Mm-hmm.
we saw gold surge 35% or so in the course of the year, but it had gained up to $2,000
Mm-hmm.
and it's come now a little below $1,900 now when I checked last night, at least 1880 or so. Um, I think, does it have more room to run? Yeah, it does. It has more room to run. Um, Largely because governments are printing money around the world.
Mm-hmm.
There will continue to be uncertainty, and this is kind of linked to COVID and what one expects in a post-COVID world, and when one expects COVID to fade away and stop disrupting. But I think there will be uncertainty for a long time. And whenever there's uncertainty, I would either buy the US dollar or
Mm-hmm.
I'd buy gold as an individual, right? Now, US dollar, for its own reasons, is being debased because they're
Mm-hmm.
printing a lot of money.
Mm-hmm.
So people are losing faith in the dollar. On top of that, China holds trillions of dollars, US dollar bills, and they're probably finding ways to surreptitiously sell it,
Mm-hmm.
which could also be causing pressure on the dollar for all we know. So
Mm-hmm.
part of the decline of the dollar could not necessarily be printing by the Fed. It could also be China lightening up on its FX reserves in US dollars.
Mm-hmm.
No one really monitors that data on a daily basis. So we don't know that. But I would I would worry about that. I would kind of look at um, holding gold for a long more time. There are people who said gold can go to 3,000 and someone said 5,000. I don't know where it's going to go, but all I know is insurance, and I want to
Mm-hmm.
keep that insurance.
Yeah.
And that 80/20 mix works very
Yeah.
well for
Yeah.
me.
Yeah. And I know you never confuse gold with bitcoins, but a lot of people talk about that. What would you say
Yeah.
to them?
So I don't believe in Bitcoin at all.
Mm-hmm.
That's not to say that the price can't go up or the price can't go down. But what is Bitcoin? It's a payment system. It's a settlement system. It's Ajit telling Rahul, there's a shelf behind me. Well, on this side of the thing, there's a shelf behind me, and in that shelf, I have basically, uh, I've got nothing in it. It's an empty shelf. It's a locker, and I'm only going to make 100 pieces of nothing in that locker, and let's start trading at it, and I'm going to start paying you with that,
Yeah.
right? So and you can mine. If you are lucky, you may find some of those 100 there, and it's yours if you find it. But there's nothing in it. It's just you and me believing that
Okay.
what those 100 pieces of digital ether that I've created can
Mm-hmm.
be traded between us, which is nice,
Mm-hmm.
right? Because now I'm outside the purview of the government system,
Mm-hmm.
right? I don't even have to worry about a gold miner giving the supply of gold or the government confiscating gold, because this is like a secret ledger between you and me.
Yeah.
So the
Mm-hmm.
secrecy part is exciting, and
Mm-hmm.
I can imagine a lot of millennials love the concept of doing things digitally. But when you dig deep, what's in it? It's pretty much as bad as paper currency,
Yeah.
if not worse, because at least a paper currency has a lie saying "In
Yeah.
God we trust." This doesn't even have a lie of "In God we trust." It's worse, maybe,
It's
in
Hava.
that sense.
Mm-hmm.
Hava. It's really Hava. So I've not understood this. I've tried very hard and
Yeah. Yeah.
grappled with it, and barring faith, so again, Manmohan Singh, one of my favorite quotes. Manmohan Singh as finance minister, July 1991, after the reforms, he
Mm-hmm.
gave a long interview with Economic Times,
Mm-hmm.
two-page, three-page interview with Economic Times.
Mm-hmm.
And in that, he made a fantastic statement. He said, investment is an act of faith. And he's right. I mean, people buying Bitcoin, I just have an act of
Act of
faith
faith.
that
Yeah.
Bitcoin is worth something. It's there.
Yeah.
So, they've taken poor Mr. Manmohan Singh's, Finance Minister Manmohan Singh's statement, and they've extrapolated it to Bitcoin. So
Bitcoin.
there's some discussion that people are fed up with gold and they're moving into Bitcoin. Yeah, that's possible on the margin. I can't imagine a gold person
Mm-hmm.
selling their gold to buy Bitcoin.
Yeah. Mm-hmm.
I can imagine I'm buying Bitcoin because I know Rahul may buy it tomorrow and Rahul may use it tomorrow, so I better buy it today. which is part of the greater fool theory.
Yep.
So that's fine. That may happen. But but having said that, so at the start of the year when the pandemic hit, I did look at a couple of things to, that top of the triangle
Yep. Yep.
to
Yep.
kind of play around with.
Mhm.
One of them was Bitcoin. I actually looked at Bitcoin and said, should I buy this for $6,600? I said, should I buy one, two, and just take a chance that I wish I had. It's gone up by three times since then, but I did not. But
So,
anyway, yeah.
so what else have you done at the tip of your pyramid?
At the tip of the
The
pyramid,
most
nothing. I didn't
exotic.
really do much. I did buy last year into some gold related companies, digital gold related companies, not Bitcoin. They
Not
all
mining
use
stocks. Not
underlying,
mining stocks. Not mining
no, no,
stocks.
no, 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 no,
No.
not mining stocks. They all use gold as a framework for a payment system.
Okay.
So
Hmm.
there's underlying gold.
Hmm.
It's not Bitcoin, it's
Hmm.
underlying gold behind it. So
Hmm.
imagine a Bitcoin but with gold in a locker.
Got it.
And so that's what I invested in two companies, three companies actually. I don't think they're doing too well right now, but I invested in three companies at that level.
You bet on
You
all the
know,
horses, so you're
I
sure to win.
did I did geographical diversification.
Okay.
They were looking at different markets.
Hmm.
So I looked at three companies in that, but that was just kind of
Yeah.
top of the pyramid.
Yeah.
I think I may have invested a little too much money now in
Yeah.
hindsight, but yeah, but I think I
So
did put
yeah.
some money in that, and I was thinking of gambling with or speculating in Bitcoin for fun. It's not an investment. I mean, look, we can't all lead boring lives. You have
Yeah.
vanilla ice cream, you want something on it, you want sprinkles on it, you want brownies on it, you want something on it.
Chocolate sauce on it. Yeah. Something.
Yeah, chocolate sauce on it, you want something on it.
Yeah.
It's not always good for health, whatever
Yeah.
you whatever you sprinkle on top, but it adds a bit of spice. So you do it,
Yeah.
but for very small amounts of money. Don't That's not just for
Yeah.
fun.
Yeah.
you
Okay.
know.
Wonderful. We are winding this down now. So Ajit,
Thank you.
uh, any recommendations to our readers on what they should be reading these days? Anything you've read, found interesting?
So I can't read much these days because of my
Yeah.
eyesight. I'm
Yeah.
supposed
Hmm.
to have surgery in July, and
Well,
that's postponed. So reading has become difficult. I
mhm,
obviously watch a lot of stuff on the video,
mhm,
but I would strongly recommend Rohini Nilekani's book. So Rohini Nilekani she was a journalist before, and then of course she's married to Nandan Nilekani, and of course she's part of the wealth created out of Infosys, etc. But this is a very, 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 very fascinating book.
mhm,
And when you read this book, at least when I read it many years ago, I don't think any of those chapters have come to any conclusion. And that's what worries me. That,
mhm,
you mentioned this book was written 2011. So literally, we're at the cusp of 10 years. So 10 years after the book is written, we're still grappling with
mhm,
90% of those issues that she's spoken about in the
mhm,
uncommon ground. And that's a very sad statement for
mhm.
society and for the fundamentals and foundation of creating long-term wealth. It's unstable. When you have an unstable society, wealth creation becomes unstable too and unpredictable.
Yeah. That's what leads to headline risks in the long term, I guess. Yeah.
Yeah.
Okay. My last question. So this is your Twitter handle. I don't think it's showing clearly. So I open this now just to check what you've been doing. But what intrigued me more is that in your profile, you have these four flags. You have the US flag, you have the Great Britain flag, if I got that right, Swiss flag, and the Indian flag. So what's
Yeah,
the.
I mean, so I've only gone on Twitter the last few months. If you look at my history, I mean, I may have signed up a couple of years ago, but I
Mhm,
started experimenting the last few months. So that's the place so the US is where I was supposed to go for my eye surgery, not landed there
mhm,
because I can't land in America yet, not allowed to land. I was stuck in Britain.
mhm.
I've been transiting through Switzerland multiple times, and I was in India too. So I've been
Yeah.
stuck in all three. So people ask me, "Where are you?" I'm saying one of those four places, depending. I don't know where I am, but that's what it's been. But there's a history to it too. Is that I used to live in America and I studied in America, and I still have an apartment in America on a beach, and I normally go there every year to swim in the ocean. And when I can't go there, I go to Goa. This is the first time I think in 12 or 15 months that I've not swum in the ocean, either in Goa or in Florida or wherever.
Mhm.
So, and I'm very much a warm water ocean person.
Mm-hmm.
So that's just the personal side. But yeah, but those four flags kind of represent, well, three of them where I've been stuck and transiting
Mm-hmm.
for the last 9 months of the pandemic.
Mm-hmm.
But before you wind up, actually, can I throw a thing about COVID? We didn't really talk about COVID.
Yeah, sure, sure.
And
I
may
just
I
thought,
just say some
yeah,
com?
yeah, yeah. Your
Yeah.
perspective will be
So
helpful. Yes, great. Please
yeah.
go ahead.
So I've been tracking COVID like an analyst would. Like doing all charts and everything else.
Yeah.
And when COVID first hit,
Mm-hmm.
I was convinced that this was going to end in July. And
Mm-hmm.
when I said July of 2020, 6 months ago,
You even
and
told me a date actually in
I
July.
gave you a date, July 22nd
Yeah, yeah.
was the
Uh-huh.
date.
Uh-huh.
So it was first July 7th, and I realized I made a calculation
Yeah.
mistake. I made it July
Uh-huh.
22nd or something like that. So what I did, I basically mapped COVID to SARS, the SARS epidemic that we
2002,
had in 2003. Actually, I was
2003.
in China, leaving China the day SARS
Mm-hmm.
broke in 2003, but officially announced in
Mm-hmm.
2003. So it's kind of mapping COVID in data terms and looking at the worldometer, getting data from there of the world and all. And the way I looked at it was that if the death rate on the margin for every 1 million people, if the death rate came down to 0.25% or 0.5%, right? People would stop worrying about it because then
Mm-hmm.
it's like the seasonal flu. In the US and the Western world, they have a seasonal flu. Australia has it, their season flu. So, I said, if it comes 0.25, 0.5%, the world won't worry about it. And I kept on modeling this because we were in lockdown mode that time. The world was in lockdown mode between March and April end. Much of the world was locked down. I think there's a wonderful chart that shows 99% of all flights were grounded between April and May. Only
Mm-hmm.
1% of the normal traffic of airplanes flying in the world was up in the air at any point in time. So, that was how the world was completely locked down at that time. So I said, okay, this is great. That keeps on because the virus needs a human to jump from and a human to jump to. But if you're locked out, then there's no chance of the virus jumping across.
Yep.
So I kind of mapped this whole thing and said, okay, we'll open up and do this and we'll go out. What I did not expect in that model, so that model showed me by July that if we followed a certain pattern, the virus would just fade away effectively. What I did not work out was the rapidity and the speed with which when the lockdown was lifted in Western world
Mm-hmm.
and even in India, but more so the Western world and the US, how people would jump around and start traveling all over, particularly the Europeans. The visits from the people in France and UK to Spain, to Italy, to go by the beach, to Greece. It was amazing. It was really picked up huge steam, picked up a lot of momentum.
Mm-hmm.
And when then I kind of remodeled it. So this is crazy because now you've gone and you met other people on Greek islands and Spanish beaches and Italian coast or wherever you've gone. Then of course you bring the virus back and it multiplies and multiplies. So I just gave up because then I figured this is
Yeah.
the human nature is not going to
Yeah.
want to be alone for too long.
Yeah.
So we've got a vaccine now,
Mm-hmm.
and there's been a relief rally in stocks
Mm-hmm.
and a relief rally in society. But look what's happened between November and December in the Western world.
Mm-hmm.
You've had this lockdown again
Mm-hmm.
in London. You have the governments of France and Germany and all saying that we won't allow flights from London
London.
or from UK into Europe.
Mm-hmm.
You've got Christmas and New Year
Mm-hmm.
very, very muted, just like Diwali.
Mm-hmm.
You've had Christmas and New Year very muted in the Western world.
Mm-hmm.
So, the Western world, two big holidays in the Christian world. You have Easter in April, and you have Christmas, and you've got Thanksgiving in some parts of North America, Canada, and America, USA. And then you have Christmas and New Year.
Mm-hmm.
And all three, have been extremely subdued.
Subdued. Mm-hmm.
And but not shut down completely. So there's still activity. That means the virus is still going to be on there. On top of that, you have the winter flu season going on, which is the normal season that happens every year in the Western world. So, you've got this combination of COVID still being around and the Western world. And that's why everyone is saying the next 4 months are going to be very, very difficult.
Yeah.
And the vaccine, 95% efficacy, hopefully. They're
Mm-hmm.
saying there's new variants to it, but this will take care of it. We don't know.
Yeah.
But right now, the world is assuming that the vaccine is there and everything is going to be fine.
Yeah.
I'm not making any more predictions given that my modeling was totally wrong.
Yeah.
But,
Yeah.
I'm preparing myself mentally
Mm-hmm.
for 2021
Mm-hmm.
to be pretty much a repeat of 2020.
Oh, wow.
That you have people that the minute you step out, you get the virus, so you have to go back home
Lockdown.
again. So you have this continuous tension
Mm-hmm.
between, begin again and
Yeah.
stay at home,
Yeah.
going out and lockdown,
Yeah.
opening restaurant, shutting restaurant. So I think this sort of tension will continue
Yeah.
for much of the year. Human behavior may be different,
Mm-hmm.
right? You open up and people may start flying all over the world all over again.
Yeah.
And if people allow you to land in
Re-
different
They,
parts of the
they,
world.
trust the analysts to come up with a term for that. Revenge travel, revenge shopping.
Revenge travel, yeah, that's right. It
Yeah.
will be. Yeah,
Yeah.
I mean, with a vengeance. I mean,
Yeah.
people will go out with a vengeance.
Yeah. Mhm.
Yeah, absolutely. He's
In the
absolutely
streets of
right. I mean, the
Bombay, bro,
frustration.
I can tell you in the streets of Bombay, all around over here, uh, I during Diwali, and even more recently, if I went to Linking Road, which is a nice
Mhm.
shopping strip in
Yeah,
central Bombay, there's no parking. This year, last time, I'd probably find a parking spot. This year,
right.
there is no parking
No
available.
parking.
You can
No.
go round and round, you don't get parking.
No.
Everywhere is full.
Yeah.
And I don't know. You know that you probably, like you said, you're tracking it much better. I don't know whether the cold climate is responsible for this surge in the US. And if it is, if there's a delta for the cold climate, India's winter is just starting. And that may not be great news for us. I don't know whether there's enough scientific evidence as yet or not for that cold
Yeah.
weather, but we, that that's almost scary for us.
It's difficult. Yeah.
Yeah.
But within this, so uh, in the last few days, when Boris Johnson spoke about the new strain of the virus, and then the euro
Hmm.
zone shut him down. So part of that, I love to connect dots and I love to look for conspiracy theories.
Mhm.
So I think there's a conspiracy theory there too, from my perspective.
Uh-huh.
So this strain that Prime Minister Johnson spoke about
Mhm.
is, you can Google it. It's October 30th, The Guardian, which is a very well
Yeah.
respected
Hmm.
newspaper and website,
Yeah.
has written about it, October 30th.
Hmm.
And they describe this strain. So it's not a new strain. It was first discovered in July. Like
Hmm.
I said, people from the Western world had gone to Spain,
Hmm.
and some people from Africa had come from Africa to Spain for the harvesting of the crops.
Hmm.
So there's an Africanish strain that was brought to Spain where everyone was mingling, and then they brought it back to Germany, France, including UK.
Hmm.
So at that time, I had read in September, October, I had read, not in the Guardian story, in some other story, that 30 to 40% of all new cases, including Germany and France and UK, were this new strain. So
Hmm.
I'm kind of thinking like Boris Johnson's giving this speech about a new strain,
Yeah.
but it's been there for some time.
Hmm.
If the Eurozone is shutting flights from London, why are they not shutting all traffic within their own country? Because the new strain
Is
is
all over.
already in their country.
Yeah. Yeah.
It's already there.
Yeah.
The only reason I can think is Brexit.
Brexit.
So Mr. Johnson is refusing to sign on the dotted line. And this may be the pressure that the EU is putting on UK. Hey,
Yeah.
if you
Yeah.
were part of EU, you would not be shut down.
Yeah.
But you're not part of EU, I'm going to shut you down. And sure enough,
Mm.
there's an article today morning in CNN, Google that,
Hmm.
which says how this is a precursor for
Hmm.
London, for UK, a precursor of things to come if they don't sign the Brexit deal.
Hmm.
So, given the deep state and given all the control of the media and what we can read and see,
Sounds likely.
including the Guardian, I think the Guardian is in on this too. They're all putting same story, because keep in mind that when the Brexit vote happened in 2016 June, it was won with a very small majority,
Hmm.
51-49,
Yeah.
said Brexit and exit,
Uh-huh.
right? And everyone says if you hold the vote again, it'll probably be two-thirds saying no and one-third saying yes, right?
And
So,
Guardian would be the liberal side, right? They would
right, they certainly don't want the
they don't
Brexit.
want the Brexit.
They
Yeah.
don't want the Brexit. So I mean, I've been messaging this to people who ask me what's going on. I'm messaging these 3-4 stories. I say, look,
Mhm.
this Guardian article of October 30 spoke about the new strain.
Hmm.
when the prime minister spoke about, he's not talking about another new strain. He's
Hmm.
referring to that same strain. And it's already in many parts of Europe.
Hmm.
So
Hmm.
why are they isolating the UK? They should be isolating everything.
Everything. Yeah.
Shut down all borders
Yeah.
and make
I'll,
everyone
I,
stay at home.
I'll be sure to link that article from this podcast. Let people get a
Do
hang of it.
link it, link it. That and the CNN article today.
Yes, I made a note.
I should send you those links.
Yes, I
And
will.
it's kind of interesting that, what's going on here.
Yeah, you always taught us that. You should always connect the dots because there could be
Connect the
something else
dots.
happening. It's not
Always
what's on
connect
the
the dots.
surface. Yeah.
Yeah,
Anyways,
great.
Ajit, as always, been a
Thank you very
brilliant,
much.
brilliant chat with you. Thank you very much. And we hope to see you at the Equity Master Conference you're presenting on
Yes,
the
I'm
9th
there.
of
I'll present.
January. We are
January.
super excited to talk to you more and take questions from the audience. So looking forward to that. With that,
Looking forward to that.
uh, thank you very much once again.
Thanks. Thank you.
Thank
Bye.
you.
Bye. See you.